Welcome to this week's Aktier event, where we are looking at the Danish shares who are on the movement. And this week, of course, we are taking Netcompany. Just take a short period and look at Disclaimer, because we have a digital IR corporate visibility subscription with this company, and therefore also me and you, Philip, cannot own this share. So we don't own the share, so that's pretty. And this is when this is recorded on Monday, the 29th of January. So the figures we are looking here are updated to this time. But a large movement in this share last week on the back of some results. But let's hear a little bit about the news flow there.
Yeah, I'll take the word from here. So if we look at the results which came last week from Netcompany, we saw for the year 2023, they grew 9.6% on the top line and had an EBITDA margin at 14.9%. And relative to the guidance, the top line was at the top end of the guidance, the 8 to 10% growth, and the EBITDA margin just fell outside the low end of the guidance range of 15 to 18% margin. But yeah, we've seen a large reaction in the share price following the results, and we'll go into some of that later and what's been driving that. But we don't necessarily think it was the results themselves, but we'll go into more of the story about the outlook. So the company guided for 2024, and we can see revenue growth is at 7 to 10%, and the EBITDA margin guidance is the same for 15 to 18%. But what the market has looked at is that maybe this guidance is a tad conservative. We've seen that the visibility of the revenue, which is something which Netcompany are very good at highlighting, has grown 17%. And we also know that they have some large potential tenders coming in 2024, particularly in the UK. They have a large framework called the Dallas framework, which can come into play in the second half year, and that currently isn't included in the revenue guidance. So the market is thinking that maybe this is a tad conservative, which is part of the story. And then if we
I think you're right. We were a little bit baffled about the share movement, because looking at the head figures, 24 guidance, a little bit shy of what the analyst had expected, right? It's showing the right movement to 26 targets on the margin side, but yeah, in itself, we probably shouldn't look for the, what was it, around 17% share price appreciation on 2 days on the result side. It's probably this short covering. The shares has been really covered short, and now they have, I guess, also in your mind, placed what you might call a floor guidance, not lowballing, but really placing a guidance that is maybe easier to beat than last year, and actually looking, maybe if you listen to them, into a climate that looks a little bit better this year, and are guiding lower growth and has a higher visibility. So maybe the short covering is not that interesting anymore, right? Because now it's moving in the right direction, and maybe the disappointments are over and the surprises can come. I don't know how you see that.
Yeah, so I think the guidance at the moment is just below the rough compound annual growth rates to reach the 2026 targets. But I agree. I think that we're looking into a market now where the growth in Denmark was flat in 2023, but can that come back in 2024? The company is suggesting that it's possible. We're seeing maybe some rebounding in the private sector, which can drive that side of things. And then we're also seeing some larger government projects coming out in 2024, which can lead to growth in the public sector as well. So if we're looking at larger improvements in the Danish market, as well as this real momentum that's starting to gain outside Denmark, then these numbers are starting to seem realistic.
Yeah, and let's look a little bit about the performance. I think it catch up a great deal after the reporting, but it hasn't been a beater of this, you might say, IT service and consulting sector.
Yeah, I mean, we can see that Netcompany really has been on a tear for the last week since the numbers came out, and it's now up about 23% year to date, but we can see that it's underperformed the benchmark for the year until this last catch-up effect, and now we can say that it's performed roughly in line with the industry, and we can also see this on a valuation slide if we move to the next slide.
Yeah. If we look at the evaluation slide, I think maybe the most interesting part is that it hasn't overperformed the sector, but in general, the sector is very, very low valued compared to history. So maybe I think that's the interesting story, right? There is still some concerns out there, or something valued in this sector that the growth maybe shouldn't pick up.
Yeah, and I mean, we can see at the charts that the earnings multiples have really come down from where they were in 2021, which was during that exit from COVID-19, where the economy was really flying, and especially the tech sector was just booming. So we've seen the multiples have come down now to a more realistic level, and that maybe as we've discussed, that the market is improving, and maybe we're finding a bottom, and this can be more of the story on the valuation side of what's happening in the IT services sector.
Yeah, absolutely. You know, I don't want to look at the peaks at the COVID-19. Everybody knows that was an excess where everybody was running for everything IT, which also helped the IT service consultants and everything, right? But the interesting part is it's lower than before. That's kind of, and it's really historically low. And are we looking into a more different than we were in 18 or 17, or is the digitalization going to stop us standing on an AI wave? But we can explain why it has come down, but we have a hard time maybe explaining it. And it's no matter what multiples you look at, earning multiples, but even the EV sales, and I know people hate that, but in this sector, you know, where there's not much on the balance sheet, you're really running with all your investments in future growth is happening through the P&L, and that also means that you can see a very sharp rebound in the margins. If growth resumes, then the EV sales numbers kind of is a good indicator, right? And we have looked back in history, and when they're hitting this one target, so in general, both Netcompany but the sector really looks to be at I wouldn't call it cheap, but at a very low. That must mean that even lower than the period before COVID-19. So that should mean that there could be some repricing or re-rating of the sector, which could benefit the whole sector as such, and therefore also Netcompany. So it's a very interesting position to be in. So it hasn't beaten the sector, and the sector is very low value. So nobody is aware of that. But let's look a little bit at the bear and bull case if we look into Netcompany.
Yeah, and if we take this company-specific bull case, bear case, on the bull side, we've touched on this already, but the market conditions are improving in Denmark, or hopefully improving in Denmark, and there's a reduced delayed decision making from prospective clients, and that was a big story in 2023. And so we're seeing potentially improved market conditions in Denmark, and then we're also seeing this lift outside of Denmark. So there were milestones in Norway and the UK in 2023 where they really sort of broke through to secure these larger projects. So in the UK, they haven't secured the tenders yet, but the Dallas framework, which Netcompany mentioned, and in Norway, the Avinor project, which is an airport project, also niche area for Netcompany. So growth on the Danish side, supported by faster growth outside of Denmark, is the real story on the bullish side, as well as potentially conservative guidance. And then the bear case, I mean, the bear case is if we get this hard landing recession in 2024, we can see that this growth in Denmark and maybe outside isn't as strong as we expect, and that actually we can see some pressure on the top line. And I think, Friis, do you want to go into some of the...
Yeah, you know, we already talked about the valuation multiples. It's always an interesting place to be if something starts to accelerate again, right? Where both the sector could be repriced, which also could lift the company, and the company itself can go and lift from that sentiment. And we already talked about the short covering, right? It has a short. The shortest has been in this year, and there has really been some negative sentiment on this one. And the software side has already picked up, but the IT service hasn't yet. So very interesting. And actually, and now we talked about the Danish, but really looking at some of the global peers, the TCS, the Tata Consulting Service, and Infosys, which are the giants of this world, were both out really indicating that they are seeing the spend, the decision making coming. You can only hold back IT investments for a short period of time, and in history it has shown that it's only for a short period of time. The budgets has come down, and now they are seeing them to start pick up again. A funny side, ServiceNow, which is a software company, but this CEO had 186 talks last year with Fortune 500 company CEOs, because they know the AI wave is coming. They really know they need to again ramp up the speed of IT investments, and that will help the software, but it will also help the IT service, because I think a lot of companies might be wondering where should they put their investment to get the return out of it, right? In a new AI world. So, and there the IT consultants and IT service companies really think come in, right? So that's a strong position to be in, that it looks like the sector is relatively low valued and could be re-rated if something should happen. And it looks maybe like the last year's drag, the companies postponing some IT investments could come back with higher there. And on the bear case, I always have recruitment necessary to deliver the growth. As an IT service or consultancy company, you live from people, right? So it's always a big risk. I think that they have actually right-sized the organization, and they have kept the people on board as a very well known in Denmark. So that mitigate that risk of not recruiting the people. And then I have one that is shift in market demand due to AI, where the companies were maybe not where they need to be in the next 5 years. So you need to follow that the company moves with that expansion. So we looked a little bit about the sector was valued low, and also maybe if the sector is valued low, is Netcompany then on the short and midterm numbers valued above that or under that?
Yeah, so if we look at the peer group, which can also be found in the one-pager on Netcompany on inderes.dk, we can see the relative valuation of Netcompany against the peers, and we can see there's a slight discount on EV, EBITDA and price earnings, and a slight premium on EV, EBIT. But I think to conclude is it's pretty in line with the valuation of its peers, is almost right in line with the average. So I don't think there's much in the individual story, but more this ongoing story that the sector has really come down in the earnings multiples from where it was in that 21 period. And if Netcompany is in line with the peers and the whole sector starts to benefit from the various themes we've discussed for 2024, then there's potential for Netcompany to join in that journey.
And here, of course, we are looking at the short-term numbers. If we look at what they are actually guiding until 2026, if they deliver on that, then you will have, I think, including the share buyback they have guided, you have around 350 to 400% earnings bottom line growth, right? So looking on the multiples on the little bit longer horizon might even show that it's valued more cheap, but of course they need to deliver on that one. Yeah, but Philip, that was a little bit about this company, the bear and bull case, how we look at it, how it's valued, and maybe how the sector is valued, and maybe in our viewpoint could stand before a re-rating. At least it's valued historically very, very low, and it looks like conditions are getting better. So that's of course always so interesting. So thank you, Philip, for taking us through the case.
Thank you.